So at this point, it looks like we're just basically in no man's land. I think the euro is still bullish. I thought we'd actually take a dip closer to this 575. We talked about that yesterday. Post ECB, we're looking at the market from a scalping standpoint, losing that 632 and saying it would go and open the door for 106. We had that support there at 596. That held, bounced up, but we came back lower as the bonds were breaking. I thought we were going to come down here towards this 575. I didn't know if we'd make it all the way to the bias pivot 568, but we were talking about the 575. I thought we'd take a dip there. I thought that was going to present a great opportunity, and we just simply made just this minor low, and then, or we call it marginal low, and then from there we started to move higher. And like I said, this was to my surprise because, like I said, we had the bonds under pressure, and the euro just continued to gain strength. And I think once we got above the 632, the area that we were talking about yesterday, post ECB, and looking at that from basically a day trader scalping standpoint, and opening the door with the loss of that 632 for a move below 106, which did transpire. Once we got past that, it just hit some stops. But like I said, I was surprised to see it continue to move higher in light of what the bonds are doing. Now, as I said, as the bonds took a header, we've seen the euro come back. But I'll tell you what, it's holding up very well if you look what it's doing in relation to where the bonds are at. So once again, I still think the door's open for our move that we've talked about to 758 before we see a more significant correction. Do that here. So looking at it from the bigger picture, $758 is still going to be the resistance, and the support. Yeah, there's our support. We had it from yesterday, the 575, which I mean it held, but I thought we were going to come down into the 575 and test it. So support, we're going to move it down to 568, which is the bias pivot. Take a look at that. There's our bias pivot. We can still sit here in this no man's land, I think, on a very short-term basis. Take a look at this. Rob says hello. Hello, Rob. On a short-term basis, it's 610 that's going to be key. You can see it here. Right here, 610. So, but I'm not looking at it just on a short-term basis. So we had the 575, which was the 38% of the recent move. I'm gonna say right there. You see right here, here, and here. I'll show you what I'm referring to.
Paul.
Yes?
Paul. Can't see your charts. I just see your Reuters screen.
Oh, okay. Thanks very much. I apologize. Yeah, I saw the two. Thanks for telling me. I clicked onto the wrong screen.
Yep, no problem.
Okay, and I'm glad Kip let me know that. So here we are, we're in the 30-minute, and what I was saying was that I think the very short-term support that we're looking at is actually the 610. Now, we talked about that 575, which really held yesterday. I mean, I thought that we'd actually go into the 575, and so the actual low move was 588. I thought we'd actually get to 575, and I thought that was going to be a fantastic area to go in and buy, because I didn't think we'd even make it down to the bias pivot here. Obviously, we held. I mean, if you were looking in this area and saying, "Hey, look, it looks good to me," because we talked about the 632 opening the door for a move below 6, and we supported 596. Said, "Heck, forget this. That's good to me." Then you're good because you were looking at your support below 575. My thoughts were we'd get to 575, maybe even 570. I thought it was going to be one heck of a buy at that point. I thought everybody was getting a little bit overdone with the ACB bit, and sure enough, but I thought that we would have taken a little bit lower move with the way the bonds are. So our support still is at 575, but I'm moving a little bit lower. And here's the bias pivot. And what I'm talking about here is right there. And right there. So we'll split them, and I'm going to move support into right there, 562. That's a little bit longer term support in case we come into Monday and we're really under pressure. If we're going to take out this low here at 589, we're going to have to move them lower. I think we'll test the bias pivot then. Right now, immediate support for today is 610, but we're not going to list it. So here's the deal. There's no economic reports coming out at this point. The U.S. we see the Canadian retail sales is coming out, and something else for Canada. I don't remember what it was, but the retail sales, anyways, the more key report. So other than that, there's nothing in the U.S. except for grain export sales. So for right now, it's going to be 610, but we're going to go and move this a little bit lower. So we'll say 562 if we end up coming in next week under some pressure. So we'll go back into the bias chart. So this held up well. The low was 13 pips above this, but I really thought we'd make a move to 575 with the bonds coming under pressure. But we're going to move this lower in case they start the beginning of next week a little bit under pressure to 562. And the 758 is still our overall target before we see a more significant correction. And we've talked about that because we got to the 716. Remember, that was our pause for a correction, and we did that day. I said probably looking for 35 pips. It did. It got to like 40 pips, bounced right back up here, came back down. We've had a decent correction. This extra squeeze or move low here was all ECB generated, and I thought it was overdone. Why I thought it was going to be a great buy at 575. But if you look at things in context, this hasn't been much of a correction. You see what I'm saying? So the door is still open for them to get to 578. And then from there, I would think, then we'd see a more market correction, more significant, which would be, let's say we test the 624. So that would be what, about 125 pips. And then we could see what the market does at that point. But right now, the market's still open for a bullish move, for the dollar to correct. We'll have to see, how Trump is in the inauguration. Although they're starting to give less weight to any moves that would be bullish to dollar. So we'll have to go on and see it play out, though. We'll have to see how we come out. Hence my idea about what if we come into some pressure early next week. Although I think it'll be reasonably well contained. So we're going to still keep it at 758, so that puts us there for the euro. We'll move into the cable. We had support on the cable, 22.46. You see that here? That's held the market. And we talked about 23.62. Boom, held the market. So there was our support. I think the low was 54. Our support was 46, and the fib was 58. And our resistance, we said, was 23.62, and that held the market here. Once again, I think we're kind of in no man's land because we don't have any economic data now, and then all of a sudden, and besides that, we had the inauguration today. People are going to be a little bit less apt to go in and put on positions. They just want to, as I said, I think they're starting to downplay any further significant dollar moves. And I'm talking about dollar strengthening, but at the same token, no one needs to put their head on the chopping block on a Friday with the inauguration. What if Trump, and yeah, Anise was saying the same thing earlier about the no charge, and thanks to Kip, we got all that resolved. Um, but as I said, uh, there's no need to go in and put your head in the chopping block coming to this inauguration, because what if Trump comes out very protectionist? I mean, it's hard to say what, you would think he'll probably be a little bit less. So you'd think he might, I wouldn't say necessarily conciliatory, but, more workable. Heck, he may just come out, blasting guns away. I mean, as far as being protectionist. So that's why I think right now we're in no man's land. So when we came down here, we had supported 22.46 on the bias chart. We mentioned 22.52 to 38%. We missed this by essentially, 6 pips. And then we called for 62. That's our top of our zone that we've had for some time. We said that on the run up here, any moves above 23.62, I felt was just going to be running on fumes, although it hung up there for a while, but eventually came in. And we talked about 22.46 having to be reasonable, because you have to look at things in perspective from where it had rallied. So that held up really well. We came up here to 23.62. We pulled back. I mean, at this point, it's like the same thing with the euro. If you were to say, well, if they take out 22.46, how far could they come back in? Let's take a look on the fib. And this is really setting yourselves up for next week as we come into the Sunday session. What if Trump blasts, really goes a bit overboard? I don't know if we'd make it all the way to 21.52, reasonably speaking. I think we have to go back with this 22.06. So for today, it's still 22.46, but this 22.06, remember, this is what opened the door for us to move higher once we got above it. I'm going to move this back now down to 22.06 for, if we overshoot this, probably well contained. We'll just call it 122 on the low end. Although this 22.46 worked like a champ. And it's still going to be support for right now, but we're looking at for over the weekend in case anything comes up from the inauguration or any news over the weekend. And resistance, we're going to make that 124 right here. Same thing, the 23.62 worked like a champ, but we're going to give a little bit of room, once again, in case we get some news over the weekend. Going to the Aussie dollar, we talked about that and how the tendency is just to keep rallying, and it reached our target, and we saw a nice pullback. I think, let me see, I guess about 75 pips or something like that. We talked about its tendency to continue to rally, but we did reach our target, and it looks like a little bit squeezed, a little bit overdone. We pulled back, and it looks like we may have just stopped some people out that said, okay, well, I'll short it, but I'm going to put it above these highs here. I don't want this market to get away from me. The market got up there, and you can see here that this is not a long-legged doji, but we kind of finished almost in the middle of this range. And the key thing is we take out the highs here, and then we don't do much with it, and we kind of finish in the middle of this 2-hour bar right here. So that opens the door for this market to move lower, and we did. All we've done at this point is come back down to the top of the zone here. Let's see if I can move this over here. Let's go move this up. I'll correct you later. But you can see as we took out these highs here and here, you're thinking, okay, this thing's going to go to Venus. And people have their stops here saying, hey, look, I think it's a great short, but I'm going to put my stop here because if this thing takes off, I don't want to get run over. So they get stopped out, and you're thinking, okay, well, with that kind of stuff, we should have the juice to make another leg up. I'm just saying that you would think, okay, after they took out the highs, but look what happens. Then the market runs out of gas, and there's nothing left. And so the people that, let's say you have to look at, always have to look at the other side of the other trader. So you're thinking anyone that said, okay, I'm buying if we take out these highs, and they're like, well, what happened? I mean, why am I only up 5 pips, or why am I down now 15 pips? We just moved to new highs. So then the market, people can see that. They're like, wait a minute, we broke to new highs, and there's nothing? I better get the heck out of Dodge. So that's what happens when you see this market pull back. Now all we did was came back to the top of the zone. We'll show that here, the 75.26. So we're getting some short covering now. I'm talking about short covering as anyone that took a short or we took advantage of this move lower. But like I said, right now the market's quiet. We're coming into an event. We don't know how blustery Trump might be, or whether he might be more conciliatory toward saying things that won't necessarily be inflammatory as far as the FX markets. So I think right now we're just no man's land once again. The resistance is just going to be right up here. I think right here. I don't think, unlike the cable and the euro, I don't think we're moving to any new highs. It's just going to be right here at 75.80. So we come over here and we'll just adjust this for right now. And we'll leave the support here at 74.25. A ways off, but if this thing's going to fail, I think we come down here. So this thing really have to get going to do something. If the head were a little bit higher, this can almost look like a head and shoulders. You see here and here, but the head's not very, very high. If it was a little bit higher up here, it would look like a great setup for head and shoulders. But realistically, if you're bearish, you'd want to fade any moves going towards the 75.60 right in here. So let's go and move in now to the Kiwi. And we've got 70.53 and 70.25. Now, we hit our target. There was our area here, well, target in the sense that we had been talking about the bias pivot. And we said, hey, look, and we'll back this up a little bit. You can see the significance of 72.25. And this was our area that we thought the market would run out of gas. And this coincided with the same thing with the Aussie dollar hitting its target. So now when we talk about the Kiwi really, now if you look at the Kiwi, notice how it barely took out this high and immediately quickly fails, okay? Because remember on the bias pivot, we had 72.25. Remember the market stopped at 72.20, 5 pips before that bias pivot, which we had marked as resistance. And then on the rally back, look, it finally gets above 72.25 and what, takes it out by what, 3 pips? And then we turn around and we succumb. And then we really break lower. Now, we talked about the Westpac guys. They're looking for a move down to 68 cents. This market is really set up for a bigger break as opposed to the Aussie. The Aussie looks like, hey, look, we might see a nice correction. This looks like, especially with it taking it out by only like about 3 pips and stopping at this bias pivot, really looks like this market could work lower. Looking on a short-term basis, we have that 70.53. But this market, if we do get a more significant move and a break here on a 2-hour close below 70.80, that really does open the door for a move down here towards about 69 cents. But you're going to have to let that thing play out. But for right now, the 70.53, you'll probably see, we'll probably overshoot a little bit, coming to about 70.40, but it looks like we're definitely going to make a move down that ways. We'll move into the dollar CAD. This has been a real screamer. And we talked about the 33.10 being, resistance with this 50% we got above it. As I said, the Bank of Canada surprised everybody, and why the reason was I wasn't paying too much attention to it because I was afraid of just that. We mentioned before that, before the rate decision, as I said, that they have a tendency to do the opposite of what everybody expects, and sure enough, and that launched this thing. To me, I think it's really way overdone. It's just, we're going to have to see how the retail sales, Canadian retail sales, comes in today. But this 33.88 is pretty key here. They really did one heck of a job getting past this 33.10. We took a dip and we reasserted ourselves. Now you have to take a look at this. That took us into 50%. We came back, and it really feels like this is some people getting cleaned out of some stops. I don't know if this thing's really going to make a more significant move. I would kind of doubt it. We can also keep an eye on what crude oil is doing, but you have to think you'll see some people taking a little bit off the table at 33.88. So we're going to put that as a resistance at 33.88. We supported 32.56. So the next one up is going to be the dollar Swiss. And we talked about 120 being resistance, and sure enough, once again, that held it. That's our bias pivot. And you know how we talk about the bias pivot. The way I come up with that is an area where not only I see the touches, but where I see significant action against a line. You know, how, as I mentioned before, how we got past this 120 and it lit up like a firecracker. And then on the way back down, we test the 120 and we jump off of it and we rally up. And when we lose the 120, everything turns bearish. Now, it doesn't stay bearish for long, but the key thing is what you're trying to look for is significant price reaction to this level. And you're seeing that. The market rallies up here, and once we get down there, it jumps like as if it's sitting on a hot frying pan. Look at that. It jumps right off of that. And then look what, we turn around, we sail all the way right back there. Same thing, we just dip below it. There's no follow through here. And then we take off like a rocket ship. The same thing, we come all the way back down and we see a big rally back up. So you're seeing significant price reaction to this level. Hence the reason why I call it a bias pivot. I don't go by the way they used to do the bias, or the pivots. I think you had the high, the low, the close, divided by 3. I don't pay attention to that stuff. If it works for you, good for you. That's not the way I trade. So you can see here as we lost the bias pivot, the market falls apart, the wheels come off the caboose, and then look at this reaction. Look where it goes. And we had that marked, you know, for the last few days. You know, 120, that's your resistance. The bias pivot, sure enough, we get to 120 and the market just, you know, spits it up. And we turn around, we start heading back down. So until it's taken out, this 120 as good as it gets. That's 120, and we're going to stick with this 99.93. So nothing's changed here on the dollar Swiss. This has been basically the same thing since Moses crossed the desert. And we actually gave it a little bit of room. Remember, there's our 126. So let's see, what was the high? Because we said if they can get above it, looks like they didn't get much above it, but our resistance was 126. We moved it from 120 to 126, and it got up to 122. So we're off by 4 pips. So really nothing to speak of there. We saw, like I said, just like a bias pivot should do, we see good, strong reaction. So nothing's changed on the dollar Swiss. That stays the same. And when we get back, we'll take a look at the dollar yen. So there's no confusion. Move this up here. And then when we get back, we'll take a look at the dollar yen. And we can see the euro start to weaken some more. People are going to be a little bit cautious ahead of this inauguration. And we'll be back. Thanks for joining us here on the Morning Edge.